Today is Monday, November 28th, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests, should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grains today, Mark, what factors will be of most importance in driving grain prices between now and year end?
Well, there's a number of things that will likely stimulate volatility this week. First off, COVID infections in China continue to spike, and as a result, social unrest has erupted in a number of cities in protest of the government's zero COVID policies. So all eyes this week will be on China and particularly their government, how they respond to these protests. The impact on commodities has generally been negative as economic activity continues to suffer, calling into question Chinese demand. Also in Argentina, a move that was not completely unexpected. The government did announce another round of currency stimulus for farmers to sell their stored soybeans. Farmers will be able to sell soybeans at 230 pesos to the U.S. dollar. That's almost a 40% increase over the current market rate of 165. Back in September, the government offered a similar program, which did have farmers sell up to 5 million metric tons of soybeans just before their planting season began. This stimulus go around probably won't stimulate that much volume, but I think it's fair to estimate between 3, maybe 4 million metric tons of soybeans will be sold. Now, these will go right into the global marketplace and compete with U.S. exports really into the first couple of months of 2013, which will lead us right up into the Brazilian harvest. So I think it's fair to say that the sales opportunity, the window of opportunity for U.S. soybeans to dominate in the global trade is quickly closing. Also here in the U.S., we do have a threat of a rail strike. Negotiations will begin this week. Obviously, if a strike is not averted, this will just continue to add to the woes here in shipping U.S. grain, corn, and soybeans out to the global marketplace. But probably the biggest factor between now and year end is going to be South American weather. Right now, much of Brazil, the northern and central parts of the country, they're pretty well watered as they get into the final stages of planting their crops. And for right now, we're probably going to start to see yield estimates and production estimates go up. The USDA is already forecasting record production of 152 million metric tons of soybeans and 126 million metric tons of corn. In Argentina, farmers there have not been as fortunate in Argentina and in southern Brazil, as rains there have been a little bit less in coverage and intensity. In Argentina, farmers, they're only about 20% planted on this year's bean crop. That's about half of their normal pace. And corn, they're only about 25% planted, also below their normal pace at this time of the year. We do have opportunities for rains at the middle part of this week, which will provide some short-term benefit. However, we're going to need to see more moisture come in here in the month of December, or we're going to start talking more and more yield losses.
Mark, as we move around the globe here, how will the war in Ukraine continue to impact commodity prices?
Well, earlier this month, they did extend the 120-day, by 120 days, the Black Sea grain deal, which gives us reason for optimism that U.S. agricultural products will continue to flow into the global marketplace. And in fact, most estimates now are that they'll exceed the USDA forecast. The USDA is right now at 15.5 million metric tons and 11 million metric tons for wheat. This morning, they've updated their export numbers. So far since July, 6.6 million metric tons of wheat has been shipped, while corn has reached 9.1 million metric tons. However, with the uncertainties of war, headline risks are present at all times. And at the moment, it seems like the biggest obstacle into getting Ukrainian agricultural products out into the global marketplace is the backlog of inspections in Turkey. As vessels there continue to grow, as daily Inspections have been reduced dramatically since the early part of November, largely because of Russia.
Finally, Mark, what are you seeing from the large speculative traders in the agricultural markets?
As a whole, money managers, they have been net long agricultural commodities now for just over 2 years. There is one area, however, where money managers are net short, and that is in Chicago wheat. This afternoon's CFTC report is likely going to show that the short position in Chicago wheat has swelled to nearly 60,000 contracts. Now, that would be their largest short position since the spring of 2020. From a contrarian perspective, to me, the Chicago wheat prices are starting to look a little attractive as we trade down to very near their 3-month lows here this morning. At March wheat under the $7.80 level, to me, from a risk reward, looks attractive. I think you can put a stop just under those August lows, under 760. I don't think it would take much of headline risk or any of these market factors that we've discussed to start flipping to the bullish side to stimulate a pretty sharp short covering rally. I'd target a move up into the 835 to 850 level for an upside target.
Thank you, Mark. Alan, turning to the financial markets, what do you think the Fed will do at the December 14th policy meeting, and how high will the Fed funds get next year?
Well, first of all, the upcoming meeting, December 14th, will probably conclude with a 50 basis point hike in rates from the Fed. In fact, now there's a 75% probability that that's exactly what we'll see, and a 25% probability that the Fed will hike by 75 basis points. It was just maybe 3 weeks ago that there was actually a small chance that the Fed could hike by 100 basis points. So all of that has diminished as Fed officials in recent weeks have been hinting that it will be appropriate to slow the pace of interest rate hikes. And as far as how high the Fed funds rate can get, right now it appears that sometime in the first quarter of next year, we could see 5 to 5 1/4 on the Fed funds rate.
And when it comes to the industrial commodities, what's your current price outlook there?
Well, it appears that the global economy is slowing, and we are seeing already industrial commodities coming under quite a bit of pressure. So my outlook for the industrial commodities, the crude oil, copper, lumber, others, is lower. In fact, just today we had the crude oil falling to its lowest level since December of last year. One exception might be natural gas. I think I would not put that in that category of lower prices, but all the other industrial commodities, I think, are headed lower into the conclusion of this year, probably following through into next year.
Lastly, Alan, what's going on in the currency markets? What are the dominant trends right now?
Well, the dominant trend has been the dollar underperforming the news and all the other major currencies advancing and overperforming the news. Even the yen, with the Bank of Japan, with their very accommodative policies, now has come at a time, or remained at a time, where the yen has actually apparently bottomed. So I'm anticipating the dollar index will continue to decline. Even today, there was some flight to quality buying coming into the dollar in the overnight trade. But at one point this morning, the dollar actually was lower on the day, underperforming the news. Of course, the dollar now has firmed up a little bit. But so I'm anticipating the dollar will continue to decline. Most other major currencies will continue to advance.
Thank you both very much. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.